The BC government has introduced legislation that, if passed, will essentially ban Airbnb in the province. Hey there everybody, welcome back to Bald Prairie Real Estate, and this is the weekly news recap. My name is Matthew Pfeifer, real estate agent in Regina. That's my trusted assistant, 𝗤𝗲𝗲𝗲𝗲. This is where I go through the week's most interesting Canadian real estate related news articles, give you my thoughts and opinions on it. We're going to be talking about that ban on Airbnb in BC, Toronto increasing the vacant home tax, CMHC talking about how many homes have been built so far this year and how many they're projecting, as well as the rentals.ca rent report. Rent continues to increase. But as always, we got to start off with another one of my terrible jokes. And this one, I think this is my worst one yet. Did you know that kids are born with 4 kidneys, but as they grow up, 2 of them turn into adult knees? If you have a terrible joke that I can use in a future episode, put in the comments below. Let's get into this week's news recap. Starting off with Toronto hiking their vacant home tax. When this tax was first introduced, I talked about it at length, and I said it was quite a debacle because the introduction of this tax kind of fell on its face right out of the gate. They had to extend deadlines multiple times, and when people had to register these vacant properties, it started off at 1%. They've now increased it to 3%. I talked about it at the time, and I'm going to continue to talk about it, that these vacant tax policies generally have not done what the governments have said they were going to do. Before these taxes introduced, the governments always talk about how much revenue these taxes are going to bring in and how many homes will be put back on the market because of these vacant home taxes. And every single time they've fallen well short of expectations. It happened in Vancouver and it continues to happen in Toronto. Now this increase, a lot of people say, oh, this is going to be great. Those that have studied these vacant home taxes have essentially said that increasing it after that first year does very little. You get the most benefit when you first introduce the tax, and people do have their properties that are vacant, they pay the tax. But after that, there isn't much change, whether people have decided to put those homes up for rent or sell them, or they just said, you know what, I don't care, I'm just going to pay the tax anyways. For the most part, you kind of get the biggest squeeze when you first introduce it, and any subsequent increases in taxes really hasn't done much beyond that. Next, we'll talk about CMHC and their monthly tracking of housing starts in Canada. The majority of the increase in these starts was in Toronto and Vancouver. And that's good because that's 2 cities that badly need more housing. And it was specifically multi-family projects that were getting started. In fact, the number of single-family starts is actually decreasing. Nationally, though, and the CMHC report points this out, year-to-date housing starts are down 8%. So we're seeing fewer houses built in 2023 year-to-date than we saw in 2022. That should not come as a surprise with the current interest rate environment. This 6-month rolling average at CMHC tracks, well, these starts for the most part were projects that were already in motion years ago, and the developers have decided to continue these projects. I don't think this is a long-term thing where we're going to see more houses started in Canada, especially now in a higher interest rate environment. We have already seen a large number of projects either put on pause or completely put on the shelf that were expected to get going here in this year and in the future years. Because of higher interest rates, these projects are just no longer financially viable. Now, a huge reason why we're seeing a big uptick in multifamily starts is because that is what is the most feasible. Single-family homes, it's much harder to make those financially viable. But as well, CMHC offers some very generous financing options for multifamily, especially purpose-built rentals. Now, over the last year, they have actually made that program less generous. So we're seeing fewer people taking advantage of it. But by far, the CMHC financing program was the most financially lucrative for developers. It was what was needed to get these multifamily projects started. And I really wish that CMHC wouldn't have walked back these projects or this financing option and made it less attractive to developers. But even with the 270,000 homes being built so far this year, that comes nowhere near what is needed. If you look at our current population growth, we probably needed somewhere close to about 500,000 homes to be started this year just to keep up with population growth, not accounting for any lack or deficiency in the supply of homes in Canada. And we absolutely have a lack of supply. Yes, I know some markets in Canada, we've seen supply increase. That is temporary. That is not a long-term thing. I don't expect we're going to see a oversupply of houses in Canada with our current population growth. So we still, even with an increase in housing starts, are coming nowhere close to the number of homes needed to be built. Now let's move on to the rentals.ca national rent report. Nationally, the price of rent increased month over month 1.5% and 11% annually. That is back to double-digit increases. Previously, we're up in the high 9% range, now 11%, bringing the price of rent closer to $2,200 a month in Canada on average. And of course, the usual suspects, Toronto and Vancouver, it is far higher than that. Whereas in cities like Regina and Saskatoon, it's about half of that right now. I am expecting though that we are going to see the pace of rent prices slow down, although it might be temporary. And that's because this is the time of year that we typically see the price of rent start to come down a little bit. It usually happens in the cooler months as well, especially in Toronto, but in other cities in Canada, we've seen a big jump in supply in the number of rentals or properties being offered for rent. There's a whole bunch of reasons. I talk about that in my monthly Canadian real estate market updates. So if you haven't watched those, check those out because I do go into detail, especially in Toronto, what's going on there. When I've been going through these reports, there was really only a handful of cities that have seen year over year decreases in rent, predominantly the Niagara region, so Niagara itself, as well as St. Catharines. And then you also saw it in Victoria and in Kelowna. So two kind of surprising ones there. I did not expect to see that. The number of cities though where we have seen 20% year over year increases or more is staggering. Rentals.ca tracks 35 cities in Canada, and 15% of those cities saw increases of 20% or more over the year. This is unsustainable. And I'm not saying I like this. I don't like to see these month over month increases. I don't like to see house prices going way up through the roof because it's not good for anyone. And even though I talk about it a lot, just because I talk about it doesn't mean it's something I'm happy about. That's just the fact though. We are seeing rent go through the roof because we simply don't have enough supply of rentals to keep up with our current population increases. And this article, along with all the articles I talk about on these weekly news recaps, will always, the sources will be linked in the description below so you can check that out for yourself. Now let's talk about inflation numbers in Canada. When I started this YouTube channel, I never even thought about talking about inflation. It just wasn't something that people were really that focused on. Of course, a lot has changed in the last year, and that seems to be about all we talk about. I talk about, I think, every couple of videos on this channel. The expectation for the inflation numbers was it would be around 4% for the headline number. That came in lower at 3.8%, reverses a 2-month trend where we saw inflation start to peak back up just a little bit. The core inflation rate, that's the one the Bank of Canada continues to say that they are most focused on. That also dropped as well, 3.8%. The expectation again for that was to be around 4%. Groceries continue to see some of the highest price increases, although that did start to moderate just a little bit. It was about 5.5%. It wasn't that long ago where we were seeing double-digit increases in groceries, so still well higher than what the Bank of Canada would like to see. And of course, everybody that's buying groceries probably doesn't like to see how much prices have increased, but we are starting to see that slow down, which is a good thing for everyone. I've talked about it a lot on this or on these videos before, that the Bank of Canada's own interest rate hikes makes up a massive portion of the inflation right now. About 30% of the inflation is caused by the Bank of Canada's own hike in interest rates, which of course has caused mortgage payments to go through the roof. So what does this mean for you? A couple of things. One, things are still getting more expensive, but they're getting more expensive slightly slower. And when you combine this inflation number, which it's nice to see this reversal of a couple month trend, and it continues to be an overall downward trend. This is good news. Seeing things continue to get more expensive slightly slower is always better. But as well, when you combine that with some of the more recent other economic data that we have seen, more and more likely now the Bank of Canada is not going to raise interest rates here in the next couple of days from when I've been shooting this video, and it makes it less likely that they raise once more before the end of the year. Again, no one has a crystal ball, but these things point to the Bank of Canada most likely continuing to pause interest rates for the time being. Earlier in the year, it was expected that OSFI was going to make some very significant changes to lending practices in Canada, and now those final changes have been published. When 𝗬𝗲𝗄 first announced some of the changes that they were considering earlier this year, there were some pretty significant ones. There was talk about potentially increasing the stress test or making it regionalized, where in some markets it would be higher, some markets it would be lower. There was this possibility that banks were going to be limited to the number of mortgages they could give out to high ratio buyers. That's those with less than 20% down. There was also some other considerations in terms of household debt to income that were going to be proposed. At the end of the day, basically none of this came to fruition. One thing though that was really interesting when I was reading through this, and has taken a lot of people by surprise, myself included, was that the understanding of the stress test when somebody already had an existing mortgage and they were moving that mortgage to another lender was that they would have to requalify under the stress test. 𝗬𝗲𝗄's actually come out and said, no, that is not a requirement put forward by them. Now, many lenders do this, but it's not actually a requirement. So that surprised me. I was telling people, if you go change your lender, after you go to renew your mortgage, you will have to stress test again. I was incorrect on that, and so were most people in the mortgage industry as well. Now, another thing that a lot of people have been asking for was that income was to be verified through CRA. Now, this essentially already happens. People have to provide all their income documents. Of course, people can forge documents, and it absolutely does happen. 𝗬𝗲𝗄 has said that they are, quote unquote, on board with having CRA do this income verification, but nothing was actually put forward in terms of implementing said policy. So again, they're on board for a change, not actually making a change. So really, at the start of the year, we were expecting a lot of changes in the mortgage and financing industry in Canada, and this turned into be a giant nothing burger. Essentially, not much has changed at all. Here is the big news of the week, and that is that the BC government has introduced legislation to ban or restrict significantly the number of short-term rentals in the province. This is something that many municipalities in BC have been asking for a very long time, and so the BC government has introduced legislation that is going to limit, I'm going to put in quotations, the number of short-term rentals in the province. There's approximately 28,000 short-term rentals in BC, and about 16,000 of those are rented out primarily through the entire year as short-term rentals. Now, that number seems like a large number, but let's put it in some context here. There's over 2 million private dwellings in BC, meaning that even if all 28,000 are included, that's only 1.5% of all residential properties in BC. But I also understand why the BC government is putting this forward. It's something that's very politically popular right now, and governments love easy, quick fixes, something they can quickly put in place and say, look, we fixed the problem for you. We got a housing crisis in BC. Don't worry, we've solved the problem. And don't be surprised if we see other provinces, I'm expecting you, Ontario, to probably follow suit with some sort of similar regulations. It's politically popular now. We need to ban those evil Airbnbs. That'll solve our housing crisis. It's not going to. It's not going to get to the core of the problem here, and that is the fact that we simply don't build enough houses to keep up with population increases. And I'm really interested to see how long it takes for people in BC to start complaining if we do see a significant reduction in Airbnbs, how much of an impact this could have on the tourism market, which of course is a major part of the BC economy. Now, they're not really banning Airbnbs. They're essentially just going to allow municipalities or increase the fines that municipalities can levy on those that have too many Airbnbs. So what you are going to be allowed to have in BC is your primary residence can be an Airbnb as well as one additional suite. And you're going to continue to hear me talk about this all the time because what we see from governments of all levels and all political stripes in Canada is bans and taxes. That's the solution to our current housing problem in Canada. None of them seem to want to actually address supply or encourage more development. In fact, look at BC again here, Vancouver, I'm talking about you, talking about increasing development fees. That is, of course, going to see more houses get built. Again, please catch the sarcasm here on that. Instead of going after the root causes of the problem, working together with all levels of government, they introduce these taxes and fees. Now, I get it as well, because guess what? Governments in Canada have realized that the Canadian housing market is a fantastic cash cow. The fees and the taxes, the income that have been collected by all levels of government has increased hundreds of % over the last decade or two. So if you wonder why governments aren't really addressing supply, It's because they've realized how much money they can make out of the Canadian real estate market. Everybody talks about developers or flippers and all those people. That's the problem. Well, really, it's your own government that's collecting, for the most part, the most income from real estate in Canada, and they don't want to give that up anytime soon. Now, if you are thinking about buying a house in Canada, if you're in Regina, obviously I would love to help you out. Matilda will come along for the showings, but if you're somewhere else in Canada, don't worry, I have you covered. You'll see in the description of this video is going to be a link to my calendar where you can book me in for a buyer's consultation, and I will get you paired up with the perfect agent for you in your market. I'm going to give you a call, talk about what's important to you, and find you that perfect agent. And if you love learning about what's going on in the Canadian real estate market, I want you to check out this right here, which is my most recent monthly Canadian housing market update. If you like this video, please give this video a like, subscribe to Bald Prairie Real Estate if you haven't already. Leave some comments below because I love chatting with you guys in the comment section. And as always, thanks very much for watching.